Hello traders, Gary Wagner here, just before 10:30 in Honolulu, 4:30 in New York. It's Tuesday, July 26th, 2016, and we are looking at the Dow Jones Industrial Average having difficulty closing lower on the day, slightly lower, off about 19 points at 18,473. Ever since hitting that top at about 18,600, we have seen this market day after day come down ever so slightly. Of course, we've got the Fed meeting, which got underway today. We have Bank of Japan. Their central bank will be issuing some sort of a statement. I believe that's on Friday. And we'll hear something on the conclusion of this month's FOMC meeting, of course, tomorrow. S&P's also trading under pressure today, but now it is, we're trading up a point on the day at 2163.25, the high 68, the low 53. And I do know that NASDAQ was trading higher on the day, up about 10 points at 4663. Let's take a look at our first chart. So traders, as we have a week filled with a lot of data points, FOMC meeting, Bank of Japan, and some really interesting news that could come out of these meetings, whether or not interest rates will remain the same here in the United States, what kind of stimulus we might see from the Bank of Japan. When we look at the Dow Jones Industrial Average, we absolutely are seeing what I call a rounded top. You can see that the way this market went up, hit this tentative top, as I said, just below 18,600, and you can see the slow, methodical climb down. 18,400, that's really our current level of support. It's just simply based upon the low of today. Of course, when we look at different fib-based areas, we've got this long fib retracement, which isn't going to give us too much information. So what we absolutely want to do is shorten this fib retracement with the high, these highs up here, these most recent highs, and fix the low down here, this most recent low, to give us more of an idea of different areas we can look for if in fact the market continues under weakness, where in fact it might go. Let's go ahead and adjust that now. So traders, I've just done that, and really all we've done is adjusted our fib retracement, so it really only covers this last rally here, down from about, 17,000 on the bottom, 18,006 plus on the top. When we do that, you can see the 23% retracement level. That would be the first level that we'd actually look at. Should we see continued weakness in the market, the level we would want to focus on is 18,257. We are looking at a daily chart, Standard & Poor's 500. I have adjusted our fib retracement in much the same way that we adjusted Dow Jones Industrial Average, having our low here at roughly, call it 1980, highs 2171, just above these highs right in here. Now, a couple of things that I think are noteworthy. First of all, rather than that rounded top that we saw in the Dow Jones Industrial Average, here we're getting a clear and concise level of resistance, as we've got equal tops coming in almost across the board for 4 trading days, 4 consecutive trading days. The last 4 trading days, of course, up until today. Today did have a lower low, a lower high, closed roughly in the same area that we closed before. And as I said, currently we're trading up, actually now up about 2 points on the day. The real area, should this market continue under pressure, that we want to be cognizant of is going to be about 2120 to 2126. So crude oil absolutely continues on its downward track, considering that it came from a high of about 52. We're now trading much closer to 42.85 in terms of the net change, down 0.65%. And we are right now very, very close to the initial target that I set forth, I believe, about 3 weeks ago when the market was tracking at these highs. And I genuinely believe that we would see the market trade anywhere between $44 per barrel and $42 per barrel. We've certainly filled that gap at this point, and now the real question is, will the market, in my opinion, either trade sideways or trade lower? I don't really think we're going to see tremendously higher pricing come into the market. I obviously could be wrong. The other thing that we want to look at on a technical basis is this top that came in, and that's just following that extreme W that we got. And we also got this W in equities, but you got this beautiful W signaling this double bottom here, comes up, then we have a secondary bottom here, which comes in at around 36, just below that. That's also a 38% retracement. Of course, the retracement we're looking at begins at just below 52 to about 26. So those are the significant areas that we're looking at. And right now, the one that we need to focus in on is 41.93. Of course, that is a 61% retracement, and it is a retracement from this entire area. In other words, 26 to 51. I do believe we could see lower pricing ahead. However, at the same time, we have in essence hit our target at this point, which was for the market to trade between these two price points. And as I said on previous shows, I believe we'll either see a sideways market or a consolidating market moving to lower pricing. And finally, traders, just as currencies, just as the equities markets are going to be quiet going up into any kind of a Fed announcement, we're getting the same thing with the currencies. A dollar index down ever so slightly, trading off about 0.1%, 97.15, but it is an interesting daily candle in that you can see this extreme low that it made and how it was able to really close up off of that low and gain back much of the ground that it had lost during the trading day. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.